Good morning, everyone. Welcome to another episode of Feel Good Financial Friday, Triple F, on this 17th day of June, 2022. With me, as always, co-host extraordinaire Kim Lanciel, reporting from the streets of New York City, and Sam Castellan, who's down south in Miami. Well, I'll tell you one person who's feeling good this Friday, and that is Charlotte native Steph Curry, who last night, Steph and his Golden State Warriors defeated the Boston Celtics in Game 6 to take their fourth title in the last 8 years. They've been in the finals 6 times over those 8 years. They've got their fourth title, and Steph wins his first finals MVP of the series. So congrats, Steph. For the rest of us mortals who live and work and follow the world of finance, it has been anything but a feel-good week. It seems like a repeated theme, but it has been. Let's just go down the list of what has happened this week, starting with Monday. The S&P 500 enters a bear market that is at least down 20%. We closed down 20%. I think it was 21.5%, 22%. We are down a little more than that now. I'll get to that soon. NASDAQ is now down close to 34.5% year to date through yesterday. So basically a third of its value has been wiped out here in a little less than 6 months. Gas prices hit yet another high. Interest rates, let's go down the list. The 10-year yield after Wednesday hit the highest level, nearly 3.5%, the highest level since 2011. The 1-year Treasury bill crossed 3%. That's the highest since early 2008, pre-crisis, to give everyone, all our viewers, an idea of how long ago that was. And we can't leave mortgage rates out. I know Kim's going to get to this in a second, but 30-year fixed mortgage rate briefly did cross 6%, was as high as 6.3% on Thursday morning. And Sam, of course, we're going to get to crypto, as crypto entered what they're now calling Crypto Crash Monday. And you're going to give us all the details on that. So, Kim, talk to me. What is going on?
It was a rough week indeed. So, the silver lining of everything is that, there are always things that we can do to sort of like help ourselves personally. So, talking about credit card debt, there's different things that you can do. You can cut some spending, there's different things you can do, cut out that morning coffee, or maybe cut that morning coffee to a couple times a week, definitely there. So there's always something that you can do. And it was interesting last night as we watched the NBA finals in our local Irish watering hole. And as I am in an Irish neighborhood in Sunnyside, lovely Sunnyside Gardens, Queens, it was really interesting compared to, championships of past, whether it was baseball or anything, especially since the Celtics were in there, it wasn't crowded at all. So clearly people are cutting back even more. So you know what? I guess they're cutting out that extra pint of Guinness here in our neighborhood. So, there's always those things that you can do personally to try to sort of help yourself out to cut the spending. But, there's only really so much that you can do. And it helps you to feel a little bit good, a little bit better on Fridays to go and treat yourself. So as I'd said, instead of, buying that extra pint, one pint is good. So there's, a lot you can do personally. And then if you're talking about the interest rates, 6%, that was really interesting because we had made a purchase right during the mortgage crisis and we paid 6%. So as we continue looking to purchase yet another home, had another conversation with the real estate agent, and guess what? More inventory and price cuts. So that is interesting. If you can hold off yet again, I'm still saying 18 months is a good thing. That's what I'm doing. But back to trying to, more cuttings, more tips to cut spending and trying to, help your bottom dollar. There's still different credit cards you can purchase with lower interest rates, and, just do what you do and do what you can to do to kind of like keep a little bit more money in your pocket, hold on tight, keep on it, because it's not impossible to do.
Well, and the one silver lining again of higher interest rates, especially when they've moved up this quickly. I mean, it's just been, looking at some of these yields. I mentioned the 1 year crossing 3%, highest level since '08. That same yield was around 1.5% about 45 days ago. So it feels like everything has been accelerated and pulled in, if you will, or pulled forward, a term that we got to know very well during the onstart of COVID, as much of the technology was pulled forward. Speaking of technology, Sam, crypto, active week. I guess crypto did make a few headlines this week, right?
Crypto Crash Monday. That's how we call it because, yeah, it was so interesting to see how, I think that it was like the seventh time in the last, 10 years or so that the crypto crashed more than 50% of its value overall. And so we saw Bitcoin coming down from its maximum at 60,000. Now it's like around 20,000. It was yesterday. And more interestingly, I guess, like some other cryptos like Dogecoin that, like really lost 90% of its value. It passed from 80 cents to 8 cents this week. So basically everything that it gained in value for the last, 5 years or so since it was developed, now it's gone. So that brings us back to the conversation, George, on what creates the value for all crypto. And so when you think about like, Christine Lagarde's comments for a couple of weeks ago when she said like, well, crypto really will go to zero because it has no value. That really makes you think what's holding the value of crypto, because different than real estate, right? That Kim was just discussing, real estate creates you a cash flow, right? When you buy a real estate, that you get that cash flow every month. When you have
and stocks have dividends, most stocks have a dividend outside of, high growth stocks. So yeah, I get it. Go ahead.
And exactly. And so your stocks will give you dividends in most of the cases, but then with crypto, it's really not an asset class that produces any cash flow. So really the only thing that creates that value is that, as they call it, like the bigger fool theory, right? Like where you have to wait for somebody else that is willing or capable to pay you more for what you already paid. And so when that doesn't happen, like we're seeing right now in the market, then you're trapped with what you have. And so now you have only two options, right? You either hold or you sell with a loss. So for most investors, that's where they are right now. But I guess you have to hold and wait if you still believe in crypto. So let's see what happens with the market.
Yeah, and it's amazing the backdrop. Going into this week on Monday, of course, the Wall Street Journal runs an article that a lot of people on the street believe, the Fed induced it, saying, the Fed may raise 75 basis points now, is what we hear in inner circles. Of course, the market got what it wanted. We got the 3/4 point increase. First time the Fed has increased rates by 3/4 point since 1994, by the way. And yet, outside of a 2-hour rally post-Fed meeting Wednesday afternoon, the market has three, nearly, or two anyway, Monday and yesterday, horrific days. We're set to open, Dow implied open up 230 as we speak, NASDAQ up over 100. So we are going to bounce this Friday morning as we're coming to you live. However, we shall see if it is short-lived once again, or if we follow and then we close in the week with a strong note. It is a holiday weekend, so we have that to look forward to. So for all the fathers out there, happy Father's Day weekend. Happy Juneteenth weekend. Monday is a holiday for the financial system. That's all we have this Friday. Hope everyone has a great rest of the day and a great weekend ahead. And we'll see you next time. Sayonara.